Welcome back, guys, to Trading with Artis and Will. This is going to be trade recaps for the week of May 5th, 2025, primarily from May 6th till Friday, May 9th. Did pretty good, I'd say. We went 3 for 4. The first trade ended up being HIMS. I took it on May 6th. We ended up taking it on this 15-minute candle here right at the open. This was because we saw that the high of day from the previous day was broken, as well as a hold of this 15-minute candle above that breakout area. Once we see this hold, it tells us that there's a big defense of this, meaning this is a newfound support area and there's a higher probability for continuation on this name, especially since we have that catalyst with the post-earnings reaction. So once we enter this gap fill here, this gap is actually from way back here in early March from around 46 all the way to 49 here. And the peak of this candle here is around 52. So once we fully gap filled, on May 6th. That's when I took my first trim. And then we ended up trimming again on Thursday as well once we broke this 52 area. And then on Friday, May 9th, I did end up getting stopped out here. I think my one mistake here, obviously the day is not over yet, is I stopped myself out on this candle right here. When in reality, it likely should have been an actual true low of day stop, because if this does continue running, then this was actually a potentially higher low. So we'll have to see how this shakes out, but I'm happy with it. We were able to close it out in profits. Can't complain about that. The second trade was Robinhood on May 6th as well, and we took the June 20th 50 calls at 4.2. The biggest thing we were looking at is a break of this wedge here. If you go down to the hourly time frame here, it's a lot more clear of this structure here. What you see is that despite all these huge gaps in this consolidation zone and then a steady slow decline, shows you that there's low volume, but also all these pullbacks are just retests. So essentially all it's doing on this name is reestablishing a new support area at around this 46. And once we see this actual range break and this downward trendline break, that was the trigger for the entry. And then we ended up staying in this name. And then Thursday is when we got this gap up above the higher time frame trendline break, all the way from this candle from March 3rd. And then we were able to actually hit the peak of that on Thursday at around 54.87. And that's when I was able to take my first trim. And then on Friday, May 9th, I was able to take my final trim on this and decided to just close it out because I started to see some weakness. The biggest thing here is we want to see this 54.84 be new support, right? Like this is a new level that we want to see this name actually hold. But because we weren't able to hold that, ended up cutting this in profit because I didn't want to give away any more profits on this name, but also looked a little weak, especially since we have this China tariff news potentially over this weekend. Just no point in holding that risk. The third name was Tesla. I took this on May 8th, and this is probably one of the best swings that I've had in a while, besides from last week with Spotify. The biggest thing that you want to look at here is this range that Tesla's been trading in. It's around 295 all the way to 270. The significant part is going to be Wednesday's candle here on the daily time frame. What you'll see is that this is kind of like a quasi hammer, where it tells you that despite being a lot of selling pressure on the day, sellers were not able to bring price down past this 270 level. The point for being short is you want to see this 270 actually break down and then have a potential continuation all the way down to 260 maybe. But that's not what happened. Buyers are able to step in and actually regain control. And then once we broke past this little trend line here, that's when I knew it's likely that we can see some continuation here, especially when you go down to the lower time frames here. You'll see that despite this last hour of kind of chop and noise where we sold off of fear, the structure was still really good. And if you go on the 4-hour time frame here, that 4-hour candle at the end of the day could be interpreted as a nice little flag. But other than that, I was able to take this trim on Friday as we broke this 295. Took the first trim at this break of this resistance zone, took the next trim at around 302, which is going to be this resistance point on the daily time frame here, all the way from that March 3rd candle again. And then of course, still in this trade a little bit with some runners. I have them stop at break even. The great benefit of doing this and trimming along the way is that now you're not risking as much capital because you've taken some profits off the table. If I get stop lossed out at break even from my entry point at the 6.55, I'm not going to be upset because I've already taken profits off the table. I leave that trade happy. And lastly is going to be another Spotify trade. I will say the biggest key takeaway for this trade is that I likely should have taken more time on this. got a little bit greedy on this and I expected more momentum from this all-time high breakout here. So I took this on May 7th, actually on that break. And what ended up happening is we just started chopping. Obviously, this is a risk that can happen with any name, especially when they're trying to break a all-time high resistance zone. Sometimes we'll see it cleanly break and follow through for a long time. But on the other hand, on the other tail end of that risk is that it can break it and then consolidate around that zone as a settlement point and kind of like a pit stop before it continues higher. And that's exactly what's happening on Spotify here. I ended up getting chopped out on these. I did take next week's expiration, so 5/16. Obviously not that much time. And then after Friday's price action here, we had a huge rejection off the highs here. The contracts were just decayed and premium chopped. So at the end of the day, this trade, I ended up closing it out for a round of 65% loss. Not too upset with this. I think this is going to be a pretty big leader, similar to Netflix for the next coming months here. So I'm definitely keeping Spotify on my list here. Want to view it as no bias, no emotions. I'm not going to let my previous trades influence how I see the stock anymore. You got to keep that non-biased view to have an objective view on what you can do in terms of taking the next steps for a potential trade. Thanks for sticking around. All in all, very happy with how this week went. I think I did the best I could in terms of risk management. It's really difficult for me sometimes in terms of managing the profits, especially when you have some leaders like Hims and Hood that are clearly leading the market, whereas the rest of the market is just choppy or even pulling back. And so there's always that risk that goes in your mind of saying, is this name going to start to show weakness as the market continues to sell off, or is it going to continue dominating and actually continue holding? I think at the end of the day, it's more so about managing your risk and managing your portfolio and how much money you have in it rather than being right all the time, because you can be right and still lose money, right? I would much rather be right and make money, which is the perfect picture kind of environment, but that's not always what we'll get. Other than that, looking to stay primarily cash over the weekend of May 9th, we potentially have a China-US tariff agreement where it might be lowered or there might be some type of agreement, and we want to see how that affects the market. If you look at SPY here, we're kind of consolidating in this zone, and we're also just shy of this 200 SMA here. So no action until we break this. If we can break this, there could be a lot of continuation here.